War, trade, and the market, how global conflict shapes financial power. Every war leaves more than just scars on the battlefield. It reshapes economies, currencies, and global power. The stock market is often the quiet witness to it all. Conflict has always been one of the biggest drivers of change in the world economy. It destroys, rebuilds, and redistributes wealth. Understanding how it does that helps investors see opportunity where others only see chaos. The link between war and wealth. War and money have always been connected. Nations fight over resources, influence, and survival. But every battle also becomes a test of economic strength. In ancient times, armies marched on silver and grain. Today, they march on oil, technology, and debt. The stronger the economy, the longer a nation can fight. Wars accelerate innovation and spending. They push governments to print money, borrow heavily, and redirect industries. Markets react to that pressure in predictable cycles. World War I, the birth of modern finance. Before World War I, the world's financial system was built on gold. Countries backed their currencies with it, and trade flowed freely. But the war changed everything. To fund the conflict, nations printed more money than ever before. Gold standards collapsed, and inflation soared. The link between money and metal was broken forever. After the war, economies struggled to rebuild. The 1920s boom followed by the Great Depression was part of that adjustment. The lesson was clear: global conflict can shift financial power faster than peace ever could. World War II, the dollar takes command. World War II destroyed Europe's factories but strengthened America's. While others borrowed, the United States built. That production power made the dollar the new global anchor. In 1944, the Bretton Woods Agreement made the US dollar the world's reserve currency. Oil, trade, and global finance began revolving around it. The economic battlefield had a new winner. After the war, Reconstruction spending through the Marshall Plan created massive demand. Companies like General Motors and IBM grew into global icons. The war ended, but its economic momentum lasted for decades. The Cold War, spending as strategy. The Cold War was not fought with bullets, but with budgets. The US and the Soviet Union poured trillions into technology, defense, and influence. This rivalry created one of the most powerful innovation waves in history. From satellites to semiconductors, competition fueled progress. Military research led to civilian breakthroughs, including the early internet and computing. The space race turned into the tech race. Markets loved the spending, even if it came from fear. Entire industries like aerospace, energy, and telecommunications boomed. War without fighting still meant profits for those who understood where governments were investing. Oil, sanctions, and economic warfare. Not all wars are fought with armies. Some are fought with oil and sanctions. Economic pressure can be as powerful as a bomb when aimed correctly. In the 1970s, the oil embargo sent shockwaves through global markets. Prices quadrupled, inflation exploded, and economies stumbled. It proved that resources could be used as weapons. Today, sanctions target countries like Russia, Iran, and North Korea. They restrict trade, isolate banks, and shift alliances. The battlefield has moved to spreadsheets and supply chains. The new conflicts, technology and trade. Modern warfare is not just about land or weapons. It is about data, chips, and supply chains. The new arms race is digital. The United States and China are locked in a struggle for technological dominance. Whoever leads in semiconductors and artificial intelligence will control the next century. Trade policy has become national security. Tariffs, export bans, and intellectual property battles now shape markets as much as military news. Investors who track these power shifts can see where the next growth or risk is forming. Economic rivalry creates volatility, but also opportunity. How markets react to conflict. At first, markets hate uncertainty. When war breaks out, stocks usually fall and investors rush to safety. Gold, oil, and the US dollar often rise in value. But over time, markets adapt. Defense spending grows, production ramps up, and new technologies emerge. War spending becomes economic stimulus. For example, during World War II, US unemployment dropped to record lows. Factories ran day and night. The short-term fear gave way to long-term growth. Winners and losers of conflict. Not every nation benefits from conflict. Those who start wars often lose more than they gain. But countries that rebuild wisely can rise from the ashes stronger than before. Japan and Germany became global manufacturing leaders after World War II. Their focus on efficiency and innovation set the stage for decades of prosperity. Adversity became a foundation for reinvention. Investors who spot those recovery trends early can see enormous returns. History rewards resilience and adaptability more than dominance. Destruction clears the field for those ready to rebuild. The role of defense and innovation. War accelerates invention. Jet engines, radar, GPS, and the internet all began as military projects. Fear funds innovation. Today, defense budgets drive research in cybersecurity, robotics, and space technology. These industries often spill into the private sector, creating new markets. The next global tech boom could come from defense innovation. When governments compete to outsmart each other, investors benefit from the breakthroughs. Behind every military race is an innovation race. Progress often comes from pressure. The price of power. Wars cost money, and debt is the hidden consequence. Governments borrow to fund defense, and inflation usually follows. Every conflict leaves a financial hangover. After major wars, nations face choices: raise taxes, print money, or cut spending. Most choose inflation because it quietly reduces debt. That is why many post-war periods come with strong growth but weaker currencies. Understanding this helps investors protect their wealth. Hard assets like commodities and real estate often thrive when inflation rises after wars. The system always seeks balance after conflict. Globalization and fragility. For decades, globalization created peace through trade. The idea was simple: countries that depend on each other are less likely to fight. It worked until it didn't. Now, supply chains are weapons, and alliances shift quickly. Chips, oil, and rare earth minerals have become strategic assets. Economic interdependence has turned into economic vulnerability. Investors must understand this new landscape. Regional independence is the new goal. Countries are bringing manufacturing home to secure stability, even if it costs more. How investors can adapt. Conflict and trade tension will always exist. Smart investors use history to predict where money flows next. Every conflict creates new industries, and every peace treaty creates new opportunities. Watch where governments spend. Defense, energy, cybersecurity, and infrastructure usually lead in uncertain times. Those sectors grow as countries fortify their futures. Diversification is the best defense. A global portfolio can balance risks when one region struggles. History shows that markets eventually recover, but never in the same way twice. The future of economic warfare. The wars of tomorrow may not involve soldiers. They will be fought through data, energy, and economics. Cyber attacks, trade embargoes, and digital currencies are the new weapons of influence. China's digital yuan, US sanctions, and Europe's green energy push are all part of this new battlefield. Control over data and energy will define superpowers. Whoever wins those wars will shape the financial future. Investors who think globally, stay educated, and remain flexible will thrive. Power will shift, but opportunity will always follow. The key is to focus on adaptation, not prediction. Final thought. War and trade shape markets because they shape human behavior. Fear creates volatility, and rebuilding creates wealth. Understanding that rhythm turns chaos into clarity. History repeats in patterns. Conflict breaks systems, innovation rebuilds them, and markets adjust. The winners are not those who predict the war, but those who understand what comes after. For investors, the lesson is simple. Every era of conflict brings a new cycle of progress. The world changes, but opportunity always returns. This is not financial advice. It is financial awareness and a reminder that power, like wealth, is never permanent, it simply moves to where it is prepared.